voice. Some say it's language or tools, others say it's logical reasoning.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of indeterminate length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 14th day of March, 2018. So glad to have you with us today. It's a beautiful 14th day of March, the day before the Ides of March. That's right, tomorrow's the 15th, the Ides of March, so watch your back. Now, if you're returning, welcome back. If you're here for the first time today, I'd like to extend a very special welcome to you. We're so glad to have you with us. We are in our second decade of broadcast history, so grab the day planner and do pencil us in for the next decade. I've got a chart up of the S&P 500 Emini Futures. If by chance you cannot see the chart, you won't see any of the charts during the show, and if you'd like to see the charts, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered all the way through the end of the month. You have to register once per month, but you only register once per month. Once you register, you'll have one-click access every single day to the show, to the charts, and to the chat box. That is your window to the world. Also, as a backup, youtube.com/CFRN/live. We provide a live stream on YouTube every day during the broadcast. So if GoTo ever lets you down, just switch gears, switch channels, jump over to YouTube, and the show awaits. A little bit of a hastily thrown together memorial service as we started the show. Stephen Hawking, the British theoretical physicist and cosmologist, has died at his home in Cambridge. He was 76. Amazing thing about him, the disease he was diagnosed with so many years ago, most people have a life expectancy of 2 years once they're diagnosed. There are a small percentage of people that do live a long life like Stephen Hawking did. If you didn't know who he was before the Big Bang Theory, I'm sure you know who he is now. 76 years old. His children, Lucy, Robert, and Tim, call their father a great scientist and an extraordinary man whose work and legacy will live on for many years. Hawking worked on black holes and quantum fluctuations. His 1988 book, A Brief History of Time, sold more than 10 million copies and made him a global celebrity known for his wicked sense of humor. Hawking had an early onset form of ALS that progressed slowly, ultimately leaving him paralyzed and using a computer to speak. When he was diagnosed at 21, he expected to live only 2 more years. He was in a movie I saw not too long ago, bit part, very small, had to do with God and his belief on heaven and God and death and the afterlife and all of it. Maybe we'll talk about that a little later in the show. For any of you that have thoughts or comments in regards to that, I do believe as he grew older, as happens with a lot of us, I don't think he was the same atheist at 71 that he was at 31. We'll see what some of his last public comments were later in the show. Ethereum is throwing out the playbook. Can't they do that? Can't we just solve scaling? Can't we just solve privacy? Can't we just say done and get to feature complete? That was the question Bob Somerville asked the audience at the Ethereum conference in Paris on Thursday. I could have gone to Paris. The comments coming as part of a broader talk that called for an end to tribalism in the community, supporting the world's second largest blockchain, of which we are a part. Community manager at Ethereum and an ambassador for Blockchain Alliance Sweetbridge, Somerville opened the conference on a note that would reverberate throughout the next 3 days, that while the development of the Ethereum, in quotes, world computer is a technical pursuit, it cannot escape social entanglements. More recently, debates concerning the return of lost funds have demonstrated cracks in the platform's existing governance, which relies on a process borrowed from Bitcoin and Internet development, the Request for Proposal process, also known as RFP. But while contentious changes tend to be avoided in Bitcoin, Ethereum developers have long warned that being too cautionary with code could lead to stagnation. Otherwise, we'll be a sitting duck like Bitcoin and be overtaken. Still, lacking a forum to resolve debates, development platform GitHub has become somewhat of a battleground. And trust me, I'm learning all about GitHub here these last couple weeks, with the Ethereum code base ruffled with political pull requests urging developers to make Ethereum immutable or to increase the transparency of the Ethereum Foundation, the nonprofit that oversees development. As the conference showcased, Ethereum developers are now faced with the problem of how to keep development fresh and adaptive. They've got to do it in new ways without sacrificing technical scrutiny. Indeed, that fact was acknowledged in many of the week's panels and sessions in Paris. Greg Colvin, developer of Ethereum's virtual machine, said at the first meeting, we recently had a huge amount of conflict. These open source guys can really go at it. There, Colvin laid out his pitch for the Fellowship of Ethereum Magicians. I kid you not. A council that will aim to succeed in developing a unique governance model for Ethereum. According to Colvin, technical debates have been obscured by politics. However, with his new group, he hopes to cut through the issues by advocating for software changes driven by developers. It is the developers who ultimately decide what goes into a hard fork. So, will there be a hard fork? Time will tell. We are progressing nicely. Those of you who participated in the CTG pre-sale and have not yet sent in your wallet address, please do so. We want to get those tokens transferred into your wallet, get them off the books as we move into the next stage of CTG, cryptocurrency, official cryptocurrency, global Christian community. Let's take a look at the numbers from around the world, and then Mike will step in and give us a recap of what happened today in the live training room. We'll start here in the U.S. These are the cash markets. We'll get to the futures in a moment. Currently, the Dow is down 263 points. It's a little over 1%. NASDAQ is down 21 points. S&P 500 is down 13. Russell 2000 is down 7. It's almost half of 1% for the Russell. It is half of 1% for the S&P. And again, the Dow down a little over 1%. In the commodity basket, crude oil off 26 cents today, just shy of 50%, or half of 1%. Trading 60.45 last. Gold off $1.50, trading 13.2560 last. In the Asian markets, color of the day continues. The Nikkei at the close was down 191 points, almost 1%. The Shanghai was off by 19, a little over half of 1%. And the Hang Seng down 166 points today, a little over half of 1%. And as we turn to the European markets, we've got one spot of green. The FTSE down 8 points at the close. The CAC down 10 points at the close. And the DAX was the green on my screen. The only green, there it is, 2.5 points. They tacked on 2.5 points, 0.02%. Basically, a red day. Around the world, every corner of the globe. From commodities to the markets, you name it. The VIX is green. Okay, let's get over to Michael. John will be joining us shortly. We'll talk about this chart. We'll talk about this sell-off. We'll talk about last night's Concierge Trade Alerts. And we'll help you see how this could complement your trading program. Ready, Michael?
Yes, I am ready. I am ready.
Okay. Take it away.
Got it. Got it.
I'll be here when you're done.
All right, Dwayne. Thanks. Okay. Good afternoon, everyone. Let's see. Today is Wednesday, the 14th day of March, 2018. I'll get to the spreadsheet in a minute, but we had a red day today. I didn't make it red yet. I'll make it red later. It's just easier to read right now. I make it red. I can't see the numbers. But anyway, today, if you have not taken a free trial with us, come to the home page here at CFRN.net. Right in here where it says sign up for the CFRN Live Training Room. 100% free trial. User indicators on our strategy. Click here. When you click there, you will be brought to this page. And on this page, all we ask for is your email, your first name, and how you found us. Click the submit button. Once you hit that submit button, you'll be sent the confirmation link. You must click the confirmation link. Okay, if you don't click the confirmation link, you do not get a free trial because we don't know you took the trial until you click that link. Okay? Now, today, here it is. Today, as I said, is the 14th day of March, 2018. We lost 7 ticks on crude, 8 ticks on gold, and we made 2 ticks on the ES. All right. We didn't have a ton of opportunity today. 6 trades is what it was. So on the month now, we're up $711. That's over 10 days. And on the year, we're up $8,076. That's over 47 days. Okay? 8,076 over 47 days. All right. So let's go and take a look at what happened here. Now, the gold did not give any opportunity all the way through up until here. Then it gave a bounce off the BBC right here, and it stopped me out, -8 ticks. Gave me a break even right here. And since then, it had a break even bounce off the BBC right there. And that was it. So the gold, I mean, none of the markets were really that generous today. One of our partners got his goal early on in the Russell. But, I mean, you can see right here on the Euro, it was in a downtrend. But you see the slingshot down here? The cycle was not giving us any opportunity. Okay. See right here, we weren't trending. We had lower highs and higher lows, so we couldn't take the bounce there. We missed that long there and that long there. And it looks like this short over here too. Okay, and then we got into the break. And during the break, I would have been looking for a higher swing here. So I wouldn't have taken a bounce off the BBC here. I would have been waiting until it got over here. And it broke this dynamic resistance, which it recently did. And then gave us a pullback here. Like that. Okay, so there would have been a long trade right here on the close above that trend line. And that'd still be going right now. We didn't get anything in the room this morning though with it. Okay. Crude oil. We had crude inventories come out today. Okay, and I had not realized that my clock, my computer clock, has been 2 minutes fast for some time. On crude, right in here, we had a shorting opportunity. We ended up getting 1 tick out of that, and then we stopped out over here. So we're at -7 at that point. We missed a short right here and a follow-up short right there. Okay, and then the crude inventories came out, sent it all over the place. And way back over here, it looks like right in here, 1036, we missed a shorting opportunity right there. I don't know how I ended up missing this. I know I wasn't feeling so good this morning, but we had a break even right there. And a short right there. Okay, and then we get into the break here, and I'm just looking down here at the slingshot as I hover over price. There was a long from right here to capture that leg up. Okay, and then looks like a short off the BBC right there. That probably would have been a break even. Okay, and that was it. This highlighted area you see here, that is where price was when the API numbers came out yesterday afternoon. Okay. Now the ES. On crude, we ended up with -7. On the ES, we ended up with +2 from this little move right here. Let's scroll back. Okay. On the ES, it started out right here with a shorting opportunity, pulled back, and it actually gave another shorting opportunity right here that I missed. I drew the trend line, but then I didn't see it finish closing. I drew the trend line back here, but I didn't see it close there. That would have given us the goal for the day right there. Changed directions and started to go up, but we had dynamic resistance. It's not broken. Came back down, dropped through the zone, gave a shorting opportunity right here. That probably would have been a break even. Pulled back into the zone, give another shorting opportunity here where we took a couple of ticks. Then it got all in here where it made this big drop, and we didn't have a trade set up in there. Okay, and now it's pushed in a new low on the day right here. Now let me go take a look at the daily double. Daily double. Oh, okay, it was the NQ. Oh no, it was the S&P too. Yeah, Dwayne said, those of you guys who don't do the daily double, it was considered selling the ESME at 27.64 with a final target at 27.55. And so we've hit that final target now. Okay. Anyway, coming into here, it just got really choppy. There was a long right here off the BBC. Well, it wasn't just off the BBC. It would have been a close above the trend line, right? The trend line would have been something like this. And close above the trend line right there. Would have captured a couple of ticks on that or gotten a break even. And that was it. That was it on the ES. So we ended up with +2 on the ES. All right, now back to this. Okay, so we had a red day today. You see, I missed a bunch on crude. That definitely would have fixed things up, but I don't know how I ended up missing that on crude. Today we lost 7 on crude. We lost 8 on gold. We made 2 on the ES, so -125 on the day, and we took 6 trades today. Okay, so on the month now we're at 711.25, and on the year we're at 8,076. Over 47 days, averaging 171 per day gross on the year. Okay. Yes. If you have not taken a free trial with us, go to the home page here at cfrn.net. And right up here at the top where it says sign up for the CFRN Trading Room, 100% free trial user indicators on our strategy. Click here. When you click there, you'll be sent to this page. On this page, put in your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent to confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, you will not get a free trial. Okay, gotta make sure you click that confirmation link. And that's it. And that's just in time to jingle John. With that, I'll pass it back out to fabulous Phoenix, Arizona, at Studio A overlooking South Mountain, America's largest city park. Dwayne, if you are prepared. Okay. Dwayne must not be prepared. Or his mic is off.
No, I'm right here.
Okay.
Recap of the recap.
We didn't get the goal for the day today. We had a red day.
Okay.
We had a red day, sadly.
Well, that's the truth about trading.
It is indeed. It is.
Some people don't want to believe it, but it's true.
It is.
There we go.
True. There we go. I see your charts.
All right. Yesterday, guys, we had some two-sided action. We actually had 3 triggers on the S&P off the Concierge Trade Alerts. By 27.92, ran up 15 points. So 27.82 dropped $400 per contract. Got back above the trigger. Important prices, important areas are almost always tested. And then down we go again. This time 19 points or $950 per contract. If you add all of these up, it comes up to 42 points. 42 times $50 per point is $2,100 per contract. Here's the rub, bub. We never get out at the swing high or swing low. Why? Because we trail our stop. And if we trail our stop, we're always going to leave a little something on the table. But by protecting our backside and leaving the front door open, that occasional runner, we actually have a chance to catch it. All right. So how much are you going to give back on the pullback? Well, that depends a lot on your risk profile, size of your account, just how comfortable you are with that. And it will take some time, some screen time, some trading time, but you'll find where you're comfortable. 15 points, what if you only got 7.5? 8 points, what if you only got 4? 19 points right here. What if you only got 8, 9, 9.5? Are you with me? If you caught only half of these 3 moves, just half, 21 points, $50 per point, it's over $1,000 per contract for the 1 contract trader. For the 10 contract trader, the person who has earned the right to actually trade that many contracts, just because you have the money in an account somewhere to cover it doesn't mean you've earned the right to trade it. Our belief is that you start with 1, and as you earn money in the market, you use that money to underwrite your 2nd and underwrite your 3rd and underwrite your 4th. And if you do the right thing, which is difficult because we see things and we just want to jump in, and we end up well, when we see the train take off and we go chasing it down the road and jump on, we know what happens. It happens over and over and over. That's why one of our little advertisements floating around out there says, are you tired of getting stopped out every time to the tick? You go long, the market goes short, vice versa. Well, there's a reason why that happens. And if you become a partner, we're going to spend 90 days helping you understand how the market works, how to read a chart, so you don't become just one more casualty of traders who or people who try to become traders. We've been helping people become traders right here since 2005. So if you're ready to learn how to trade, you're done with parlor tricks and crystal balls and gurus and all of that. If you just want to learn how to trade, because it's like learning how to drive. Once you learn, nobody can ever take it away from you. You'll never need another guru, nobody to call out some numbers, nobody to send you something in an email. You just open the chart, read it like you're reading the morning paper, and then you make your decisions based on what the market tells you. Not what they say on CNBC, not what the Wall Street Journal says, but what the chart says. If you've not taken our free trial, I know Michael just told you, I can't encourage it enough. It's 5 days where you're able to observe, trade along with us, use our platform, use our indicators, learn our strategy, ask all the questions you want, and at the end of the 5 days, you're able to make a well-informed decision as to whether or not what we do, what we've found to be consistently profitable, is going to work for you. If not, we shake hands, you give us back our indicators, we say goodbye, but we do hope you'll come and hang out in the audience for the radio show each day. All right? Now, Michael, did you say John's here?
Yes, he is.
All right, I got his mic right here. Right there. Okay, John, welcome to the show.
Hi there.
How are you?
Had better days.
Oh, I'm sorry to hear that.
Just having an off day. Actually, there's supposed to be some sort of a cosmic storm going today. There's a lot of press about it. Yeah, and sometimes that can make you feel off, believe it or not. So
now, what is a cosmic? What is a cosmic storm?
It's a radiation from the sun,
like a solar flare or something.
Yeah, a big one. This one was supposed to be knocking out satellites and stuff, but I don't think that's happened. But they were talking about it yesterday. Look, in spite of that, we did very well in the last 24 hours. We actually have kind of developed a new way of putting out the info, and we're really catching what we've been able to do in the last few days. Is we caught almost all the swings, all the tradable swings, within about 10 points or so on the Nasdaq, a few points on the S&P, and I was up pretty early this morning, around about 5 or 6, and the market was right down at the lows. We caught that rally into the open. We were short all the way from the highs yesterday. As a matter of fact, right from the highs yesterday, we were short, covered it and reversed. And on that rally around 10 o'clock, between 10 and 11 this morning, we went short again, and right at the highs, and just covered a short while ago, right at the lows, about half an hour ago. And very happy to see the market rallying. Potentially interim lows could be in here. At least we're going to have a rebound, a bit of a rebound, but I'd be moving the stops up right now, right underneath this little rally. I mean, I'm quite encouraged by the extension that we've just had from about the 736 level or so, 740. I think we put a buyout around 745, somewhere like that. Had a nice rally, but I'd sell it right here, right now, just to step back. I haven't got time to tweak. I'm just, I'll put that in later. But I think let's see what happens. If it consolidates here and looks like it's going to go higher, then I'd go back on board. But this is a it's good. It's a good rally, and potentially we've had a kind of a three-wave pullback right down here to the lows. The mid cap has been an underperformer today, and obviously the Dow is sort of a disaster. Really, the Dow has been the worst performing index now for about a week or more, and that's not necessarily a bad thing, because as long as the Nasdaq is performing the best, that's a good thing. So, as I said a couple of days ago, we might have a 1 or 2 day pullback. It looks like so far we've had a 2 day pullback, and if we can nip this in the bud and have a good and having a test in the morning and a rally in the afternoon is more bullish than bearish bias wise. But can we, if we get renewed upside here and can actually put in a reversal today, we could actually blow through this reversal that came in yesterday, this down reversal yesterday, and that would be very very impressive if that happens. Now the next high off, if we did do that, I would be I would be probably looking to sell the next rally highs. Now today's Wednesday, we're down 250 odd points on the Dow. We've been down worse. The transports, which were up yesterday, are also down today. That's not so good. So if we roll over and sell off this afternoon, it actually sets us up for a kind of a mini crash scenario, because we've got Thursday, Friday going into Monday, and the technical structure on the market really does not look good. We're actually set up for this. This reminds me of March of 2000, where a lot of stocks that were, we peaked to the Nasdaq on. Here we are in March, by the way. We actually peaked on March the 10th. In 2000.
Yeah.
And we had a sell-off, and then we rallied back to March the 24th of 2000, and the actual all-time high was March the 10th, 2000, and the secondary high didn't quite get there. It was a retest. It was the second time we got over 5,000, and at 2 o'clock in the afternoon on March the 10th, I sent out my famous sell signal to a very wide audience, including the biggest trading desk in the world, the Merrill Lynch. And I said, sell everything. And we were at about 5,150 when I sent that out, or maybe we were over 50, it was over 5,000 anyway. And by the close, we had broken down through 5,000, and we never saw it again until, 15 years later, or whatever the number, when we last broke it. So it was a pretty big deal. And I also forecasted a 750 point decline, and people thought I was bonkers. And we got 1,000 point decline before we had the first rally. It was almost a record down day in March, April. If you remember, it was about April the 5th that we had that bottom. So I'm seeing sort of a deja vu scenario developing here that is rather troubling. And so, we may have had a kind of a mini sell-off here into March the 14th. This is Pi Day, by the way, 3.14. I know all the numbers.
Right.
Happy Pi Day to everybody.
Yeah, right.
And so the next couple of weeks are really very, very critical in terms of the vulnerability of this market and the similarities to the 2000 time frame. And we had, I think it was April the 5th or 6th, we had a 1,000 point down day in the Dow. It was pretty scary back then, from 10,000. So that's like, it would be the equivalent of a 2,500 point down day today. So my advice to sell a short while ago turned out to be the right thing to do. The market's coming back again. And I really think this market is, I'm seeing the broader market. Look, the one of the things that's been quite notable in the last few weeks is since the market broke in January. At the end of January, going into February, is the advanced decline line has peaked and has not been. I don't think it's gone to a new high since. I have to check it, but it's really been underperforming. And so, what that means is that the underbelly of the market, which has been super strong for the last few years, and has been leading the indices higher, is now. I see the market's trying to rally here, so just be ready to get back in. But I don't think we're in too much of a hurry to get back long just yet, but we may be. So the underbelly of the market, in other words, a lot of the stock, for example, Maxim. If you take a look at the chart of Maxim, it's just been underperforming here for about a week, and it really has not been acting very well at all, and it kind of looks top heavy, in all honesty. Now, Twitter, on the contrary, made a new high today. By the way, Twitter is doing something really amazing, which here we go. Look at the market now. So we have to jump back on board here and go with it. The
MAXM, is that Maxim?
MXIM. Yeah. No, this is very encouraging now. What's going on here? This is good. There is some power to the market. I mean, I sensed. I actually said we could have a strong PM rally today, and I sensed that we were putting in a pretty good bottom here earlier on. So I mean, look, we're just about to go positive on the Nasdaq. That's pretty big. That's very impressive. I mean, we're down 250 on the Dow, and we're positive on the Nasdaq. That really tells you. And by the way, a little trick that you might pick up on is this has been a feature of the market for a while in this corrective phase. Is you know, when the market's turning, the Nasdaq leads. It usually leads, right? So I don't know how now we're getting a retest and we're failing again. So it's not just it's a little bit choppy here. So just tread carefully. Now, but if we do get a reversal in the Nasdaq and we sort of reverse back up in the S&P and stabilize some, the Dow has a habit of coming from behind. So it's not always a good thing to buy the weakest tool in the sector, if you like, or the index in the sector. It's usually a bad thing to do. But in the case of the Dow does tend to come from behind once the market shows its new direction. So if we do get a rebound today, the Dow could be actually, you could make some extra points, because if the Dow reverses and it doesn't have to close positive today, but if it reverses, it tends to catch up in a day or two, so you can actually score some extra points. Because 100,000. If you go up 100 points in the Dow, that's pretty good money. And if you catch a 200 or 300 point and move to the upside, it's a really good tradable move. And I think you've been doing that quite successfully. I mean, obviously, if you caught the down move overnight, you're doing well today on the Dow. Probably the best index in terms of profitability.
We had a 230-point drop on the Concierge Trade Alert for the Dow, and then prior to that, we had a rally up at 25,075, ran up 35 points.
Yeah.
So yeah, the Dow was a good performer.
Yeah, and by the way, look at. I mean, I've shied away from Maxim here. I haven't bought it for quite a few days since we sold it near the top, and I really haven't been tempted back in. And I'm glad, because look at it now. It's breaking down to new lows on the day today. Now, and the semiconductors are also not performing too well today. The LABU is actually one of the stronger indices today, and so is the tech TECL. But I'd be very, very careful of being too long anything right now, because it really is a dangerous. This market's more dangerous today than it's been in since January, put it that way, and you have to keep that in mind. So the fact that what I'm trying to say is, Maxim breaking down is really a feature of a weaker advanced decline index, because Maxim represents the mid-tier kind of market. So what's going on is a lot of these formerly strong stocks are a lot weaker today, and they're tending to drag the market down, and the breadth is negative. The last few days, the hard part of figuring out the market has been the breadth has been a bit stronger. It's been mostly positive, even on some down days. Whereas today it was sharply negative earlier on. It's a little bit less right now, but it's still negative, which means that there's more stocks going down today than going up. And obviously that's not a good thing. And, in the past, I mean, we've had some spikes where we've had minus 2,400 or minus 1,700 or so stocks negative to positive, but we're around 500 right now. So it's not too bad, but it could get a lot worse before the day's out, and that tends to drag the indices down when that happens. So the fact that we're not too down today is encouraging for furtherance of an upward rally. But look now at Maxim. I mean, Maxim looks terrible on the chart. It's got a really bad looking sort of a top to it, and considering the way it's been going up for a number of weeks, it's kind of weird when a lot of people were sort of buying it because maybe they thought it might get taken over or something. It doesn't look like there's anything like that in sight right now. And to be honest with you, since the company came out with good news and has been doing a lot of good things, it's sort of a puzzle as to why the stock's not performing today, for example, as well as Nvidia, which is still holding up very, very well. But I'd be very careful now of Nvidia because it's got a kind of a toppy looking formation, and look, most of the fangs are off their highs. What's really worrying me is Facebook, which has a very similar pattern to some of the high flying stocks of 2000. And what it looks like to me is, we've had a break from the highs. We had an all-time high at 195, came down to 167 or so, rallied back up to a 185 top, down to 173 or so, 172 and a half, back up to a double top at 185. This double top here is really ominous and potentially very dangerous, because it means that we could be in for about a $30 drop in Facebook, down to a new low, down to about 155 or so, which will really freak a lot of people out. And Google has a kind of a double top. It didn't make a new high. It is vulnerable to going back below 1,000, possibly even down to the mid 900s rather. Netflix, which has been touted, Netflix has been performing tremendously, but it also is a little bit vulnerable here. If it breaks the 315 or 310 level, it could really tank dramatically. Amazon is actually putting in a kind of a head and shoulders top today, which is very dangerous looking as well. If it breaks, below the 1560, 1575. So, if it breaks this uptrend line, it could go down very fast as well. So all of these, and Adobe, let's have a look at that. This is also a FANG. All these FANGs look 9 times out of 10, when you see a lot of red developing around the top of the daily chart, you're going to get some sort of a pullback. So the stage is set for some real trouble here in the next few days if we don't rally. If basically we don't rally this afternoon, the market's got to do something pretty extraordinary to get itself out of what's developing here right now.
Right.
And I mean, compared to yesterday, we were basically positive on the advanced decline yesterday, and now we're negative. So the market's kind of fighting a losing battle today at the moment. and
yeah, it is.
And here's the thing. Look, it's people are sort of a bit complacent after this huge rally we've had, and the stocks are really priced for perfection at the moment. And the way it feels to me is the market's seeing something really, really bad around the corner. I don't know, something horrible, something devastating, because we're sort of set up. I mean, I'm telling you, the next crash is going to make January or February rather look like early February look like it's going to be worse. I think we're in for something like a 2,000 point, 2 or 3,000 point down day. So something really bad is looming, in my view, for these markets right now. Now, after that, we could have a monster rally, just in the same way as, when the market was going down in early February. I mean, it felt like the end of the world, especially the Tuesday and the Friday where we bottomed. But this time, I think it's going to be more of a shock and more of a really calamitous kind of decline. So you have to be extremely careful. And look at the VIX. The VIX is what I've been going on about. Now, we thought that it might go down to 35. The fact that it hasn't, and it just been actually going up here the last few days. I mean, honestly, the measured move on the VIX probably take us up to 75. I've got a target of about 75 on the VIX. So, I mean, there could be a devastating move up in the VIX right now that would, be, what's the word? It would be, synonymous with a crash type decline in the market. So, obviously there's a lot of opportunity there. I mean, obviously the VIX is a little risky, but it's firming up as we speak. And I'd be long the VIX right now as an insurance policy.
What are your thoughts on Kudlow?
Has he been appointed?
Frederick says Trump is going to appoint him, and Karen asked what are John's thoughts on Kudlow being
I'm a little bit, I think Kudlow,
announcement could come as soon as tomorrow.
Yeah, I mean, actually, people were saying, Kudlow is good for the market. Listen, as soon as they mentioned his name, the market started tanking. And I don't think Wall Street has a lot of confidence in Kudlow, is my personal feeling. And I really don't have either, to be honest with you. I think he's not the right guy for the job. And the market's tanking now. It's coming off.
Who do you think would be the right guy?
I'd put in Scaramucci, to be honest with you. I think Scaramucci's Scaramucci's got more market sense than most people on the planet. He's made $1 billion. He knows how to manage money. He's a very smart guy, and he would have been a much better choice. To hell with whatever everybody says about the guy. He's 10 times more loyal to Trump than Kudlow is, and he's articulate. I mean, the guy knows more about Wall Street than almost 99.999% of the people. I mean, the guy is extremely sharp. He's extremely well connected, and he's admired. Plain and simple. So I'd pick him in a heartbeat.
Interesting. Okay. So I guess we'll find out one way or the other tomorrow.
Yeah. So, and I think Trump, this nonsense with him before, I mean, he was snookered, and it was a unfortunate turn of events that happened with him before. But I think that, listen, he's better suited to an economic post than a communications post, in reality, much better suited. And he has a way of talking to people. And I mean, listen, think about it. If you compare him with all the other guys who've come before him, including that fellow they keep dragging up, the Democrat guy who they drag on periodic, every now and then, who was pretty sharp. I mean, Scaramucci's light years ahead of most of these commentators. He's the real deal. He's made the money on Wall Street. I mean, he's like Cohn. The guy's made $200 million. But Scaramucci's like light years ahead of Cohn, and as far as I can see, he's much better, much more market savvy. And that's what you need. You need a guy who's really market savvy. And that's what, Trump needs, a market savvy guy to be advising him. And I can't think of anybody better except myself. So, I mean, I'm not as market savvy as Scaramucci is, but I can certainly give, in the same way as I give people pretty good guidance every day on this show, I could give Trump some guidance he doesn't even know about. And I'm telling you, those 99.99% of people on this planet, except to listen to this show, don't understand what's been going on in these markets for the last few years. And I've explained it to them, over and over, and I'll do it again probably by the end of the week. But there were three reasons why the market went up in 2016. Number one was 2015 was such a bad year. It should have been a strong year, but it wasn't, because the pre-election year is usually a very big up year. So we were making up for that. The second thing is we were going up because, and the second thing is, you know, the market was underperforming in the last 2 years of Obama's presidency, and we were sort of playing catch up to that. And we were also going up on the possibility. It was kind of a trifecta. You know, we were going up for these three reasons. We were going up because, you know, Hillary was ahead in the polls, and that meant a continuation of the Obama legacy, if you like. And, you know, the fact that Obama was reelected was bullish for the next 2 years. I mean, what happened in 2012 to 2014? We had a massive up move in the market, you know, obviously because of the Fed, but also because a second-term president always has two strong years before the trouble starts, right? And then the third factor was the Trump factor, which from the tax cut at the end of September 2015, that was the first bottom, the Trump bottom, and the market rallied 2,000 points into December. Then it had that terrible correction in early 16 that threw everybody for a loop. But as soon as Trump won New Hampshire, that was the second bottom. And then, as I forecast, we were going to go up another 2,000 points. We ended up going up, and we adjusted that upward after the Brexit bottom. We went up 3,000 points into the election, you know, when I started coming on the show. And then we had the election retest. And then after that, you and I have been as mega bullish as they come until the January top, I think is fair to say. So, you know, ever since then, we've been a lot more cautious. But we've managed to call this last rally very, very, very accurately until this recent high a couple of days ago. And now the market is going down. And as I said, they just mentioned Kudlow, and look at what the market's doing. So, you know, Kudlow's a nice guy and all that, but he doesn't have he's a bit of a blowhard, you know, this guy. So really not the right guy for the post at all.
Okay.
So the other thing is the metals. Right now, the gold is kind of a bit of a, and you know, look, we got the whole thing with next week is we've got the Fed as well, and whether they're going to raise rates. They may not raise rates now, because if we're crashing by Monday or Tuesday, they're probably not going to do it. So, and then when they don't do it, maybe the market may not like that. You know, there's a lot of factors kind of coming to bear. Just let's have a quick look at this gold here. Yeah, right now the gold is sort of shunting back and forth. It has a potentially great looking bottom if we break out to the upside, but we're not able to do that. And the silver is underperforming again. So, you know, the problem we have here is if we take out the good work of the last few days on the gold, unfortunately, we're probably going to go down and test that 1306 again. But I think that's probably going to hold if we do. And actually, if we reverse off the 1306 as well as we might, and we could have a dip before the Fed anyway. You know, we could you know, when the market's going down, it's just crazy. I don't know why this happens, but the gold stocks just seem to get hit when the market is coming off, and that's happening again today, even though they've kind of been acting quite well the last few days. The gold stocks are not performing very well. They've kind of had a couple of pretty good rallies, and they've looked like ready to go, and then, you know, they're coming off again. So, as far as I'm concerned, I mean, look, the JNUG, for example, about 1360, you know, above today's highs. The nugget above today's highs. I think you got to buy these things if they go back to the highs of today. Any of the gold stocks that take out today's highs, probably going to be a buy. And I would say the same for the gold. You know, if we break out above 1330, I'd probably buy it at 1327 actually. But you know, and I'd probably buy the silver up around 16 and a half, or in the high 1650s. Because I think if they turn back up today, they're probably going to go. But even the platinum, which looked quite good yesterday, is coming off again. And the palladium also has been having a very hard time running up towards 1,000. You see that it's sold off from 1,000. I think we had a stop in there near 997 or somewhere like that earlier on. So right now we're actually short all the calls. But I would definitely go positive if we reverse back up later today. Also, the grains, we put a sell stop on these things yesterday on the beans. We thought the beans might go, but if you remember, I said the grains were not in unison. They were underperforming in the other sectors, and actually the oats are breaking down, which is a bad sign. And the only kind of strong in grain today is the wheat, which is a good thing. I'd still look for a point to rebuy the grains, but not necessarily just yet, unless we turn sharply higher before the day's out. So the oil also has been kind of stumbling here. And look, the bonds, the other thing is, everybody's been fearing the bonds, interest rates breaking out over 3%. It's not happening. It's actually going the other way. And in spite of the 313,000 jobs and the appearance of a very strong economy, there has to be something weakening in the economy, because I don't think the bonds would be at 145 today if the economy was really, really strong or getting stronger. So all of these factors, we might be entering a little bit of a slowdown period in the economy, which also means that stocks might be sensing that and are not reading it very, very positively right now. So it looks like it's definitely going to be cut low.
Yeah, Karen said that she just saw a headline that said he had accepted the position.
Yeah, okay. And look, the VIX is right on the high. That's not a very good sign. So the market could just doesn't look good. Just doesn't look good unless we turn. We look, sometimes when they name these guys, it takes a while for the market to respond. So, if we do go positive before the day's out, then maybe Wall Street's going to like that news better. But right now, it doesn't seem to be very well received. And actually, ever since Kudlow's names come up, we've been selling off. So that's kind of it in a nutshell.
Well, thank you, John.
All right. All the best. Thanks a lot.
Appreciate it very much. Look forward to talking to you tomorrow.
Okay. All
Have
the
a
best.
great day.
All right.
All right. Yep. Okay, guys, on the S&P 500, as you can see, the Concierge Trade Alert from last night. If you didn't get a chance to grab a screenshot, here's another shot. Shoot it. There you go. And done. Okay. Consider buying 27.75 on the S&P. Ran up 8 points, $50 per point, $400 per contract available. We never get out at the swing high or swing low because we trail a stop. So you only caught half the move. That's 4 points. That's $200 per contract. On the downside, consider selling 27.57 if the opportunity presents. It did. It dropped 6 3/4 points. Maybe you only caught half. Maybe you only caught 3 points. It's $150 per contract. And if you happen to have earned the right to trade 10 contracts, well, step back. On the Dow, these are, by the way, this week's zones on the Dow. I've already updated those for you. Last night's email said to consider buying 250.75, 35-point gain. And if the opportunity presents, sell 24.920. It's a 230-point drop right down to the weekly trading zone. We get used to this, and sometimes we forget about this. The zones are an area, and while we expect price to reach the zone until it doesn't, or spikes it, That's where it's going. The Russell, these are this week's zones as well. Last night's email, consider buying 1602, ran up $250 per contract. And it also said if you get the opportunity, sell 1590, and that dropped $200 per contract. And we know that important prices and important areas are almost always tested. So what happens? Price gets back above the trigger, as it did here, and down we go again. Now well, let's go back here. I mean, if you caught half, or if you caught half here, 100 points. It's $500 per contract. You can do the math. Okay? The key is earning the right to trade those multiple contracts. Not just, plunging in and trading them because you have the money in your account. That's not a qualifier. On the NQ last night, the email said to consider buying 70.65. We ran up $1,000 per contract. And on the sell side for the NQ, 70.35, the swing low right here, 70.36.50. We didn't trigger there, but this move could do it. Keep your eyes peeled. 70.35. On gold, consider buying 13.30. That just stopped you out. And selling 13.24. Stop out or walk away. And this one actually delivered $200 per contract. Bonds, nice move to the long side. 17 ticks at 31.25 per tick, buying 144.19. And on the sell side, 144.03. Not traded below that yet. Crude oil, consider buying 61.05, $280 per contract, the upside. Consider selling 60.65. First we had a stop out, followed by a $500 per contract drop. Okay. Now again, we all know we don't get out at the swing high or swing low because we trail a stop. So whenever you see, look at these numbers, whack them in half. What if I only got half? What if it reversed and came back on me and I only got half? I think you'll find it. Half, certainly with the volatility we currently have, half's a pretty good living. Oh, and then there were beans. Sell 1042, never triggered on the long side. Sell 1042, $300 per contract. If you only got half, 150. Yeah. Okay. Good word for the day. Now, if you haven't sent in your wallet address, you participated in the pre-sale, you haven't sent your wallet address, please do. We would appreciate it ever so much. It would help us get everything caught up. Yeah, you're welcome, Mickey. Study up on that. Oh, Brian looking for a radio trade. Okay, we'll take a peek here. See what we can find. What market do you typically trade, Brian, the S&P? All right, yesterday we started talking about self-control. The secrets of self-control. Part 2. Romans 14:4 says, with the Lord's help, they will stand. Put your past behind you. Philippians 3:13 and 14 says, one thing I do, forgetting what is behind and straining towards what is ahead, I press on towards the goal. This scripture exposes a misconception that will keep you from gaining self-control. Once a failure, always a failure. You might say, oh, I've tried to quit that bad habit. In fact, I've tried over and over. I guess I'll just never be able to get control of this. That is a misconception. Paul says in 2 Corinthians 4:9, we get knocked down, but we get up again and keep going. Get up again and keep going. Have you watched a baby learn how to walk? They fall down a lot. In fact, they freak you out. But they don't stay down, do they? They get right back up again. They keep on trying and trying and trying, and ultimately, they succeed. How far do you think they'd get if they just gave up and said, some people were meant to be walkers and some were not? Failure in the past does not mean you'll never be able to change. We have to stop allowing our past to control our future. Focusing on past failures, however, does guarantee this. You'll probably repeat them. It's like driving a car while looking in the rearview mirror. Eventually, you're going to collide with what's ahead of you because you're busy looking behind. You have to put the past behind you where it belongs. Few people had more failures than Thomas Edison, inventor of the light bulb. Most of us would have given up, but not him. He once said, don't call it a failure, call it an education. Now I know what doesn't work 1,000 times. When you realize sin doesn't work, it becomes a defining moment and your springboard to victory. A winner is simply someone who gets back up one more time when they fall down. So, the good word for today is, with the Lord's help, you will stand. And try to do it on your own. Give that up. Talk to God. By the power of the Holy Spirit, you can and will succeed at whatever you put your mind to and your hand to. Remember, faith is not what we believe, it's what we do with what we believe. And that is our good word for the day. Now, Brian, looking for a little trade here. Now that 27.51, is that going to hold? Boy, I don't think so, honestly. In fact, the next zone below is 27.32. All right, Brian, here we go. Consider selling 27.47. Time to stop. Which means the momentum of the market will trigger you in. Now, if we were to move up and go sideways into the close and roll into Globex, this would still be valid. Okay. Targets are going to be 2,700. No, that's right. 2740. Yeah, we're going to leave it with that. Two targets. 2740 initial target. And final target 2734. Again, that remains valid into Globex if it doesn't trigger in the afternoon session. Now remember, we don't like to risk more than $300 per contract on a discretionary trade. If the setup on the 30-minute requires more risk than that, go to your 5-minute, the way I've showed you, and then go to your 4-tick range, the way I've showed you. Okay? So 2747 on the stop, target's 2740, 2734. At $50 a point, 6 points, that's your maximum risk. If you don't find it on the 30, go to the 5. If you don't find it on the 5, go to the range. If you don't find it there, if it's just not right, then just walk away. Okay? All right. Let's see how that turns out. And thanks so much for tuning in today, guys. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.